Hi guys, so today we are going to talk about basic. I'm going to try to talk about how we can project turning points in the market specifically, because basically the whole way that I trade, and I've got a lot of lines here, so I'll try to find something a little bit cleaner. But, in essence, this is how I set up my trades, right? So I'll go to a daily and a weekly, and I'll put together various places where I expect price to change, direction, for instance. So in other words, I'll have a little green zone here where I expect buyers, and then I might have a little sell zone up here where I expect sellers, and maybe something, up higher, and then etc., 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 right? And then, so this might be a daily chart, daily/weekly, okay? And then, around these turning point areas, I'll then boil it down to 15-minute, hourly, 4-hour, and start looking for evidence of basing out or topping out at these zones, and then watch the price action in these areas to try and project or try and time rollover, or when it's changing direction to the upside, right? So, in other words, using the market fractals to try and time trades based on longer term areas of support and resistance, right? It's not rocket surgery, is it? Okay, now, the big crux of all of this is great in theory, but the big crux of all of this is what is sort of the big part of figuring out where these currencies are going to change direction? Okay, and with the incidentally, this is what you and I put together last month, over a month ago, at FX Street. We put together this on the euro. Let me get rid of. Actually, I'll leave that up. I'll leave that up a sec. We'll get rid of this. But this is what you and I put together for the euro. Okay, we took this screenshot right here. Okay, we said euro is going to bounce all the way up to about 33 and then push down to somewhere in the vicinity of 126, 127, and we got the part up to 33, right? And now we basically right here. Okay, so yes, I'm South African. So what are market fractals? The best way to describe a fractal is a self-similar building block of the larger whole. I don't want to get too technical on you because it makes for a boring radio show. But the best way that I can think of to describe a fractal is if somebody showed you a painting, all right, and you stood back and took in the painting as a whole, and then they showed you one little pixel of the painting, you could see all the details of the bigger picture in that one pixel. So that one pixel is a self-similar building block of the larger painting. Said differently, the 15-minute, hourly are self-similar building blocks for your daily and weekly charts. Understand? It's probably the last thing to come in trading. It's a little bit like one short game in golf. It's the last thing to come along in golf, but it's the first thing to disappear. Market fractals are kind of like that for trading, in that it's the last thing to really grasp, but probably the most important. Well, just planning on multiple time frames is going to, just practice planning on multiple time frames is going to do it for you. Yep. Okay, anyway, guys, so I'll expand here in a minute. So I think that we are in large part right here. Would you agree with that? Which means that, essentially we're looking for euro to continue down to into that sort of 26 range. And then there's going to be a fundamental change, and I think that we actually cruise up here to somewhere around 38. If my two pip opinion is that the world's going to discover that this QE reduction is premature, and Ben's going to disappoint the world sometime late September and go, oh no, we haven't got the sufficient numbers that we needed. We're going to continue with this 80 odd billion a month in QE. Sorry guys. And everybody's going to go, what? And we're going to have a whole bunch of dollar weakness for a while before this thing absolutely gets crushed. Alright? But that was a little projection, so I thought I'd just show you that to reconcile what we talked about last month. But, okay, so what are some of the best ways? Let me just point out some of the obvious stuff in the market. Alright? So, if we're looking at, we'll get a fresh chart here. And guys, I think with all the, there's so many complicated trading systems out there, methodologies, etc., that I think some of the very obvious stuff is overlooked, and this is the purpose. This is the purpose of this webinar today, is to kind of point some of that out. All right. Now, I'm not saying that just basic support and resistance is the only thing at one's disposal, but I still maintain that visual support and resistance, in other words, what is just there for everybody to see, is still about the most important thing you can look at in technical analysis. How many of you would agree with that? Right? So there's a million ways to trade the market, right? There's people who use EMAs, they use oscillators, they use heavy algorithms, they use market harmonic patterns, they use Elliott wave, they use, I don't know, freaking millions of things. Okay? But the one universal constant that everybody can see is exactly what has happened previously. Okay? So if I showed you this Euro daily chart, alright, and I drew nothing on this chart, what would you say is, now I've just kind of intimated where I think it's going to go, but what would you say is the prevailing direction right now? Because you're going to have direction, and then you've got to have, because if the direction of the market's down, you want to short it in the context of that direction, or long within the context of it. I would say it's probably down for now. Right? I could see how James is calling it bullish, because he's saying, well, hang on, this has made a higher high, and why don't we just do this? It depends on the time frame, but on this daily chart, which way would we say that things are going right now? Bullish, based on the higher high? I mean, okay, so if you're a bull, you've got to be a little bit concerned about this. The fact that that is still, yes, it's a higher high with respect to this, but it's a lower high with respect to that. Okay. Heck, I'm going to use both. I think there's cases for both. I mean, I'm using an example here where there's cases for both. I'm going to go and look at gold, which has been bearish, but we're going to look at some stuff. All right. Let's say for argument, let's use both scenarios here. I happen to be a bear to about 126, but let's use both. Because okay, let's assume now that the euro finds some support here. You got swing low, swing high, swing low, swing low, swing. We can tell that this has been an important area, right? You might even grab a little trend line here, linking those three. Okay, so would you concede that this is certainly an area of support? I think so. Okay, now what about this zone? And I haven't even gone back. I'm not even going to go back any further than this. I'd like to, but I don't want to complicate our lives, right? So here's another one here. So we'll do this. Okay. Now, if you are a bear, okay, or let's just say that, for argument's sake, that I am right and this is short to 126. Where do you think, using nothing else, people are going to try and short within the context of this little downtrend? Based on what I've just done 2 seconds ago. 131 firstly, I mean, okay, we're going to find, obviously, if we bounce here and come back up here, you're going to find some shorts, etc. But where would a significant turning point zone? I think, from the bearish standpoint, it's right here, isn't it? People sold it, sold it, sold it, sold it, bought it, sold it. Do you think that 32 is important? Yeah, very much so. Okay, and yes, I am doing profoundly basic stuff. But I'm telling you, this is the most overlooked way of trading in the world. There's so many other things that are much more fancy and much more flamboyant and you know, they tantalize the brain a little bit more. But guys, if this bounces here, which we would expect, alright, given the fact that this is a short-term level of support, what's it likely to do then? It's likely to come up to this sort of 31 zone, which was where it was sold the last 2 days. Okay, it's then going to prospectively come down, hit our little trend line, and then where is it going? Back to the resistance zone. Isn't it? So how logical is this? Alright? So we'd like to do, come down, kick off these little swing highs. So what level would that be? 2960. Well, conveniently, this week's weekly M1 is at 2950. Then where's it likely to go? Back to the resistance. Well, it was sold previously at around 3110, which also happens to be previous swing highs. So we'd like to go off that 2960 back to 3110. Then where are we going? Probably right back to the support. Okay, at that point, because we've made a shallow pullback and made a higher low at the support, where are we then likely to go? Right back to the meaningful resistance area, which happens to be for us 32.10 area. If it overshoots a little bit, don't panic. It overshot a little bit here, right? This is a range of resistance. Yeah, at Forex David on Twitter. It's a good way to reach me, or David. Okay. And then, you know, what's our likely scenario after this? Down, dead cat bounce, and off to the next level. Well, off to the next level happens to be the double bottom zone. Is this logical? In other words, how intuitive do you think that is? Anyone? Yeah, it's logical, right? I mean, so what does one do? You watch price action around these areas on like your 15-minute, your hourly to confirm this. It absolutely could, Ray. Absolutely. But if you're not good enough to be short 3 here, 3 here, 3 here, 3 here, 3 here, what are you doing shorting at your green zone? Right? And you're going to use, and one does this properly. One does this properly because there's going to be a little green zone through here. There's just no question about it. Okay? So what does one do? When it gets to your, when it gets down here, say on your hourly, you look for something like this on your hourly chart. So we cruise down here, it bounces up here, comes to say, today it comes to say 3070, cruises down some more, 2960, here we are. Why would I say 3070? Well, it was bought, sold. Bought. That's the short-term resistance zone on the spot trade side. Okay? What do you mean? Right? So chances are it's going to try and drop from there. Okay, so now it gets to this major turning point green zone. So according to our recent logic, we said that 2960 was going to take us to 131. So now we watch this. Comes down here and goes, thanks. So now we're looking for nothing but buys here, or at least getting out of the short, and then we get kind of something like this going on. Well, now it's made a little higher low, higher high, comes back, and it's just sitting there. How about trying this buy with a stop over here for our 3110 target? So that gives us risk, reward off a known area of support. Oh, but David, you're trading against the trend. Well, not really, because this is where the bulls would be hanging out in the context of the little uptrend which we made a higher high. Okay? And said differently, Ray, if you didn't want to take the 2950, 2960 buy and you're just a bear, you're going to look for the same sort of price action at 3110 and then 3220, aren't you? And the 3110, your profit target was 2960, 2970, and your 132 profit target was firstly 2960 and secondly 127. There we go. Based on support and resistance, visual, nothing else, we've got ourselves 4 trade plans, 3 trade plans on the euro, based on nothing else but where people have bought this and sold it previously. That's it. Now, what happens if these levels are not hit? In other words, what happens if it doesn't come back to 31 or it doesn't come back to 32? It's no big deal. You just don't trade. You just go and look for something else. Exactly. Nobody's got your hands behind your back saying, hey, bro, you have, dude. No. They're plans based on logical things that you'd expect to see based on historical price information. Now you're extrapolating that into the future. Just price levels typically in. Good question, by the way. Yes. If it's I used to trade by closed candles and things, but I guess I just don't. Here's going to be a weird statement. I just don't really care anymore. I guess that's such a lame thing to say. What I mean by that is I've just grown to trust price levels so much that I figure if they're going to hold, they're going to hold, and if they're not, then I just lose money. And I'm good with that. Okay? So now let's look at something. If I've missed your questions, please repost. I apologize. So now let's look at something. Now let's look at something like the S&Ps. I've never used it, to be honest. A 3-month chart, I've never really made use of it. I'm sure it has value, no question. Okay, so here is S&P chart. Okay, why is this bad boy bouncing where it is? Stunningly, it's the highs going back here to 2007. Okay, but there's a lot of things, not to mention the fact that this high here exactly was the May, this high here was exactly the May FOMC announcement, and this here was the June FOMC announcement. Okay, so in other words, the stock market has not made a high since bond rates, or since interest rates started to rise, and the Fed came out and said we are potentially going to start the QE withdrawal later on in the year. Alright? This thing was never going up based on anything other than free money. Right? It's almost unethical, but that's for another discussion. Okay, but bouncing where it is logically, absolutely. Okay, so now the question is, what do we think is our prevailing direction? In other words, do we think this has more upside than it does downside, or more down than up? I think based on, this weekly stochastic still down in the trade zone, a little bit of fundamentals, we've seen 1, 2, 3, 4, 5, 5 and change candles here failed to make a new high. I think it's very logical that we're going to come down to this trendline support at about 1530. Okay? Could be wrong in that, sure. But I think 1530 is a pretty conservative target. Now, we are bouncing off this previous high going back to April. Going back to 2007. Okay, so let's talk about how this is likely to play out. Okay, so undeniably we have a green zone here where it's bouncing. I'm going to change that from blue to actually resemble green. Okay, and remember, I think critically, support and resistance zones like this are zones. Okay, I think that, when you're dealing with daily and weekly charts, the inclination is to be razor sharp, perfect. And I like to, as much as possible, be accurate. But to me, when I look at the euro yen right now and it's printing 26.94, 26.80, I'm still looking at it and saying 127 we're holding right now. Right? To me, it hasn't broken that yet. Alright, so if we look at the S&Ps, based on the amount of support that it's hit, what would be a realistic bounce for this? It's coming off massive support. But notice here to the left is that 1592, and I'm using the futures as a tough spot. But it's coming off mega support. So what is reasonable expectation here? At least sort of a 50% bounce of this drop, I would expect. And this is always the tricky one. I always have a hard time trading after it's hit support. It's much easier trading into the support. It's a lot more difficult trading after the support bounce, because then you don't know if you've picked up more buyers here than what you are sellers at the resistance. Okay, but let's talk about how this is likely to go. So we have candle body closes around 1608. We've got the resistance visually at around, I don't know, 1593. So we're going to have short-term red here, but based on the amount of resistance, amounts of support it's touched, would we expect lows from this resistance level? In other words, would this resistance now propel it down to make lower lows? I don't think so, based on the amount of support that it's hit. That's a subjective call, but experience and just sort of making a discretionary call is in play here. So then, where would the next level of resistance be? Well, they sold it here, bought it, sold it, sold it, sold it. Stands to reason that 1640 is resistance, is it not? And where would our downside target be from there? Right around this 1480 zone. Yeah, so what's likely to happen? This stays green, kicks up a little bit into tomorrow. So I'd imagine that early tomorrow it's going to start bullish and ultimately finish up pretty good down day. Pretty good down day. So it's a late Wednesday, Thursday is going to be even as much as 25-point drop on the S&Ps. Right, and everything will be doom and gloom in the media. Right? You know, whenever I saw this bouncing, I see Jim Cramer from CNBC, he's like, oh, sell in June and miss the swoon and all this other stuff. All that's happening is it's bouncing off support. But tomorrow it's going to be like, oh my goodness, so-and-so said this and the Fed's to blame and blah, blah, blah. Yeah, well, okay, so we'd like to do something like this. Then, sort of Thursday, late Thursday, Friday, we're going to base out in all likelihood. And maybe start a little climb back up to the 1640, at which point start something like that. So in other words, trading opportunities, 1605 short, 1570 buy, 1630 sell, 1480 target. Any thoughts on this? Right? Could this do something different? Abso-freaking-lutely, of course. But given the information at hand right now, these different price levels are in play. Would you agree with that? And I'm just breaking this down on a daily and weekly chart. Alright, obviously in a spot trading world, we're going to boil it down a little bit further, day in and day out, etc. Okay? But, you know, given the price levels we have at hand, that's the way I foresee it happening in the next 2-3 weeks. Okay? You know, so just out of interest's sake. You know, I don't know, something like this. And then obviously the support points are much less likely to hold a second time. Anyway, so that's kind of what I'm expecting. I'll just leave that on the chart. Alright, any questions so far? Right, so why is the Euro Aussie? I tweeted out the other day that I'm expecting a 142 to 135 trade on the Euro Oz. Why? It's coming up weekly resistance visual, nothing else. Okay, so now let's talk about gold. And this is obviously applicable to the currency charts. I'm using some of these other ones off the top of my head. Get rid of Bollinger Bands here for a sec. Okay, so gold's been in a nice little downward spiral here. Okay, big time. Nice downward spiral. How many ma and pa shops do you think just got ripped to pieces through here? Large amounts, I'm sure. I actually feel bad for a lot of people. I mean, how many people bought gold here at 1500? Wow. Whoa. Anyway. So, you guys are very quiet today. Not a lot of participation. So now, we're at a pretty key little level here. Okay, this 1220 is previous swing high. And I think it's reasonable that this zone, now I'm giving it a big zone here, is going to be I think there's a fair likelihood that this could be morning, Kevin. That this could be the market's busy. That this could be the low for gold for some time. Now it's been in a strong downtrend, so I'm actually thinking that gold's dead money for like 3 months. Right? Because even if this is going to head up, it's going to, we're likely to do this sort of thing, aren't we? And that basing out period is going to take a long time. Pound's about to partake of 52.90. It can, but I'm looking at the support assuming it's going to hold. Because that's what support does. And I like to try and be funny, but in this case I'm actually not. Right? So I'm looking at this saying, hey, this is, it's a big green zone, but this is the big weekly green zone for gold. Okay, that said, it's just been at it a long time, and it's been at it a long. I don't. To me, chart reading, forecasting, knowing where it's going to go, is the easiest part of trading, by far. Okay, so let's anticipate toughest head games. Discipline, fortitude, money management, taking the good with the bad, staying the course. Continue, if you hit a rough patch, continuing to trust what you see. Right, exit, always wrong. Always wrong on exit, and you've got to live with that. Because exit, yes, exit, if you get out too early, then it runs further. If you don't get out, it comes back and knocks you out. So to me, exit is much harder than entry. You can enter basically anywhere you want. You know, manage your risk and you're going to be fine. So I'm not ignoring your questions. Fernando's question. George Soros talks about something I find highly interesting. Is the market in equilibrium or not? And acts accordingly. Would you agree? Is a market in equilibrium? I'm not sure I really understand the question. I mean, you know, if somebody says to me, okay, let me finish up my thought here on gold and then I'll respond to that. So let's say that gold's going to hold you. What's that going to look like? So that's something like this. Where they're likely to sell it from? 1288. Why? Because that's resistance zone. Lower low. Then we start to see a little base out for a higher move. So to me, the two trading opportunities on gold are the 1210, sell it around 1270, pick it up again around the 1190-ish. If it drops a little bit further, you can just buy a little bit lower. Get out like 1320 and then see where we're at. Anyway, so I'll just take a picture of this and record it later. Alright, so the equilibrium question. Alright, talks about equilibrium between buying and selling forces in the present. Well, for starters, George Soros is a lot more successful than I am and a lot smarter. So, you know, is it an equilibrium? Well, I think if a market's in equilibrium, it's essentially going to be sideways. That said, I've always maintained not as good looking. No, I have a bald spot that is in, you know, a very masculine area. Thank you, Martin. So I've always maintained day in and day out that people want to make money. Right. So in other words, why on those days does the market move when there's absolutely no news at all? Nothing. It might be like Italian consumer confidence. Draghi doesn't talk. Nothing is anticipated in New York. It's just, there's nothing, there's no news impetus at all. Yes, Andrew, very aerodynamic it seems these days. Very. Well, my thing is that the market moves on those days because people want to make money. So therefore, they just follow a collective direction for that day established by, you know, transactional forces, so to speak. I don't know if it makes any sense at all. Switch here. Switch. Okay, so, you know, we're talking, and I'm talking abstractly here because I've never really given it consideration. Um, but then if you said to me, well, what do you think the fair price of the Euro USD is? And I would say, well, what's the price now? 130.10. Yeah, that's the fair price. Okay, but the market to me always moves because people are at the computer, people are doing transactions, therefore it moves. So is it an equilibrium? Probably for that split second, but it's not going to be an equilibrium 5 seconds from now because there's always transactions taking place in the market and that's driving stuff. So I'm sure I'm contextually missing it a little bit, and somebody much smarter than me probably could answer that better. I haven't been doing videos anymore. Wayne's been going through an audit, and he's instructed me not to do any videos. There you go. People reassess the fair price at all times. Thanks, Jamie. Yeah, so so tomorrow is actually my last teaching day with FX Bootcamp for some time, so I'll still be on the Twitter and I'll still do FX Street stuff as needed. Okay, are there any questions? Are there any questions about what I covered today, just in terms of support and resistance, anticipating? I have no idea. Are there any questions just as far as anticipating where things are going to bounce? All one does is simply look at. I do have indicators on my charts, yes. But when I'm doing my analysis, and boot campers that have been with me for a while will test them up and test. When I'm doing my analysis for the day, this is the chart that I look at. I have a 5 EMA, and that's it. And then I have my pivots and some stuff. But, here's what I know there are a bunch of lines on here. But ultimately, that is the chart that I'm doing my analysis from. And I'm looking at this saying, right, here we get rid of this. I'm looking at it saying, great, here's what's up. Now I'll try to put it together. Right, 2960. Why? Well, what looks pretty important to me. Right? Then I could see, a little breach of that. Day and a half of green. 131 psych level. Alright, so I'm expecting sellers through there. Then what? Little dead cat bounce here, considering the support. And then continuation. Seems good. Okay, little bounce here. Probably try to bottom out here for a sec, right back to where it came from. Continue to 27. Right? So, that is how I put it together typically. And it's nothing more than, what do I think direction is? Well, direction I'm using, weekly, daily stochastic signals, fundamental stuff, what I'm expecting in the market. When the euro was going up, the whole time we were expecting to sell it at 33, because that's what we put together a month ago. Yeah, okay, we went to 34. Nothing's changed. Yeah, visual support and resistance and just defining the trend through price actions as important as anything else. Yeah, if you've got conflicting signs, just stand pat. There's no reason to trade it. Having a bias, number one. having an area that has to break for you to concede that you're wrong is important. Not buying into resistance, selling into support. That stuff's a perilous situation. Okay, but this is how I draw out my analysis. No, I've got nothing to do with it, Andrew. I did, but I've moved on. Okay. The yen, I think, comes down to 96.70 and then chases itself all the way back to about 98. Okay. Alright, guys, so thank you, FX Street. I appreciate all the attendance, guys. At Forex David on the twit. And for all those of you that have come through FX Bootcamp, it's been an absolute pleasure. And I'll see you at FX Street monthly. Okay? We'll talk to you guys in a little bit. Thank you.